Hello everyone and welcome to edupediaworld.com. Today we are going to continue with chapter 3, that is income not forming part of total income. And today we are going to deal with income known as gratuity, which do not form part of total income up to some extent. So in today's class we'll be dealing with what and how much gratuity is exempted, how much is taxable, what are the various clauses and conditions, etc., while dealing with this term of gratuity and this provision of gratuity in the Income Tax Act. Basically, gratuity is something which is provided by the employer to the employee. So it comes under the head salary. So this gratuity is a part of the head of income known as salary. So let us start our class today, which will be dealing with all the terms and conditions of gratuity, which is an income which do not form part of the total income. Let us start. Now, what does the term gratuity means? As per an English dictionary, gratuity means a gift or present often in return for favors or services. So now we can take this meaning for our purpose, that is for the section 10, subsection 10. Gratuity means a gratuitous payment made by an employer to his employee for services rendered to him. It's a payment made by the employer to the employee for the long and meritorious services provided by the employee to the employer. So, gratuity is a payment made by the employer to the employee for the long and meritorious services rendered by the employee to the employer. With enactment of Payment of Gratuity Act 1972, payment of gratuity became compulsory in most of the cases. So, with the enactment of this act, the government has made it compulsory for some of the employers to pay gratuity to the employees providing long and meritorious services to them. In this IT Act, we just have to deal with how much gratuity received by the employee from their employers will be exempted and how much will be taxable, and what are the conditions which are needed to be satisfied to get various levels of exemption. In the next slide, we'll get to know how the bifurcation is done and how the different categories are given different types of exemption. Like employees falling under different categories will be given different exemption limits. So we'll study that also as we proceed. So let us see how the bifurcation is done. Now, as per section 10, subsection 10, the employees in receipt of gratuity are divided into two major categories. Number 1 is government employees and number 2 non-government employees. The non-government employees are further subdivided into number 1 covered by Gratuity Act and number 2 not covered by Gratuity Act. So the exemption limits mentioned under section 10, subsection 10 for the employees in receipt of gratuity payment are divided into three categories. So the exemptions for government employee is different. The exemption for non-government employee who are covered by the Gratuity Act is different, and the exemption for the non-government employee not covered by the Gratuity Act is different. So we have to see that in which category the employee is falling, and then after that we will apply the provisions given for that category of employee in order to get the exemption applicable to that employee. So let us see what are the different conditions and provisions given for various categories of employees for the exemption to be claimed by them from their total income in respect of the gratuity payment received by them. Let us see one by one. So, for the first categories of employees, that is the government employees, the gratuity received by them is fully exempt. So, there are no terms and conditions in terms of government employees. If an employee is a government employee, then the gratuity received by them is totally exempt from income tax and it will not be included in the total income of the employee. So it is very easy in terms of government employees. Now come the main part, that is the non-government employees. How the exemption is calculated when an employee is a non-government employee. First of all, we'll see the conditions for the employees who are covered by the Payment of Gratuity Act 1972. For them, the least of these three conditions will be exempted. What are the three conditions? Number one is rupees 10 lakh, that is, if the gratuity received by the employee is more than rupees 10 lakhs, then maximum exemption that he can claim is rupees 10 lakh only. So the major condition here is that the minimum of these three conditions given here will be deducted or will be exempted. Either it can be rupees 10 lakh or it can be gratuity actually received. If the gratuity actually received is less, then that part will be deducted. Or now comes the main condition, that is the complicated condition which is given is 15 by 26 into last drawn salary into number of years of completed services or part thereof in excess of 6 months. So we have to apply this formula, that is half month salary, and the month consists of only 26 days. So that becomes 15 by 26 into the last drawn salary. What was the last salary which the employee has drawn? And salary here means basic pay plus day-ness allowance into the number of years of completed services. Whatever may be the number of years he has worked in that organization for that employer, that will be multiplied. And here, if the part of an year is more than 6 months, then that will be taken as a full year. And if that is less than 6 months, it will be ignored. So if I have been working for 26 years and 4 months, it will be taken as 26 years. And if I am working for 26 years and 7 months, it will be taken as 27 years, that way. So these are the three conditions. The minimum of these three will be exempted in case of a non-government employee not covered by the Payment of Gratuity Act 1972. What are the conditions? Number one, rupees 10 lakh. Number two, gratuity actually received. And number three, half month salary, that is 15 by 26 into the last drawn salary, the salary which I had drawn lately, into the number of years of completed services. So we'll calculate this and get a amount, and then we'll compare these three amounts, that is rupees 10 lakhs, the gratuity actually received, and this amount which we got after this calculation. The minimum of these three will be exempted, and rest of that, whichever will remain after the deduction, will be taxable. So this is the case of non-government employees covered by Payment of Gratuity Act. Now comes non-government employees not covered by Payment of Gratuity Act. What are the conditions for them? Here also the minimum of these three will be exempted. What are the conditions? Number one, rupees 10 lakh. This is same as above. Number two, gratuity actually received. This is also same as above. The third condition is different. What is the third condition? Half month salary based on last 10 months average salary immediately preceding the month of retirement or death for each completed year of service. So here 1 by 2 into the average salary of last 10 months into the number of years of completed services. So here a total year will be considered and not the months. So if I am working for 26 years and whatever part of the month, only 26 years will be calculated and the fractions will be ignored. And here, for the purpose of salary, salary means basic salary plus dearness allowance only if provided in the terms of employment for retirement benefits forming part of salary, and commission which is expressed as a fixed percentage of turnover. So what will salary mean in this formula will be the basic salary plus DA only if it is provided in terms of employment for retirement benefit forming part of salary, and whatever commission expressed as a part of fixed percentage of turnover. We'll add up these three and get salary for the purpose of this formula of half month salary into 10 months average salary into the number of completed years of services. So this is all theory. This will become more clear once we cover one example or one illustration based upon this theory. So let us see one example covering these three things, that is the government employees, non-government employees covered by Payment of Gratuity Act, and non-government employees not covered by the Payment of Gratuity Act, so that you can understand these concepts in a more better way. Let us see one example which will make your concepts about these exemptions and these formulas more clear. Now let us take this example which will cover all the three categories of employees as per section 10 subsection 10. Mr. Ravi retired on 15 June 2014 after completion of 26 years 8 months of service and received a gratuity of rupees 6 lakhs. At the time of retirement, his salary was, that is basic salary 5,000 per month, dearness allowance 3,000 per month, and 60% of which is for retirement benefits. He also received commission of 1% of turnover, and the turnover in the last 12 months was rupees 12 lakh, and he was also in receipt of a bonus of 12,000 per annum. Now, we have to compute his taxable gratuity assuming number one, he is a non-government employee and covered by the Payment of Gratuity Act. Number two, he is a non-government employee and not covered by the Payment of Gratuity Act. And number three, he is a government employee. We have to calculate the taxable gratuity in all the three cases. So let us take an overview of this question. This question has one thing. First of all, we'll see that the dearness allowance given. It is given that 60% forms part of retirement benefit. So when we'll calculate taxable gratuity in case of non-government employee not covered by Payment of Gratuity Act, only 60% of dearness allowance will form part of the salary. This thing you have to keep in mind. Number two, the bonus given will not form part of salary in both the cases, that is covered by Gratuity Act and not covered by Gratuity Act. In both the cases, the salary will not include the bonus thing. So this will totally be excluded. And one more thing is that the commission part will be included only in case of non-government employee not covered by Payment of Gratuity Act. Because in case number one, that is non-government employee covered by the Gratuity Act, the salary will only include basic salary and dearness allowance. So these are the things which we have to keep in mind before we proceed with the question. One more thing is that he has completed 26 years and 8 months. So what we had learnt is that in case of non-government employee covered by the Payment of Gratuity Act, the part of the year in months exceeding 6 months will be taken as a full year. So, in case of non-government employee covered by the Payment of Gratuity Act, the total years of services will be 27 years because 8 months exceeds 6 months. So, it will be taken as 1 year and added in 26 years. So, it will become 27 years. However, in non-government employees, not covered by the Payment of Gratuity Act, the fractions are ignored, that are not taken into consideration. So this 8 months will be totally ignored in case of employees not covered by the Payment of Gratuity Act. So in that case, the years of services will be only 26 years. So these are the things we have to keep in mind before we proceed with the question. So now let us proceed and take up the first subpart, that is when he is a non-government employee and covered by the Payment of Gratuity Act. In that case, how his taxable gratuity will be calculated. Now let us see the solution to part A, that is when he is covered by the Payment of Gratuity Act. What was the gratuity received at the time of retirement? It was 6 lakhs. Now we'll deduct exemption under section 10 subsection 10. And what will be the amount of deduction? The amount of deduction will be the least of the following 3 things. Number 1, the gratuity actually received, that is 6 lakhs. Number 2, the statutory limit of rupees 10 lakh. And number 3 is 15 days salary based on last drawn salary for each completed year of service or part thereof in excess of 6 months. And for this purpose, the month contains 26 days only. So we'll take 15 by 26 into the last drawn salary of the employee, and for this purpose salary is equals to basic plus dearness allowance into the years of services, which will include completed year of services as well as part thereof in excess of 6 months. So what the equation will look in this particular question, 15 days salary is equal to 15 by 26 into the last drawn salary. The last drawn salary of the employee was 5,000 was the basic pay and 3,000 was the dearness allowance. You have to keep in mind that in this situation we do not consider that 60% because that is applicable only when a non-government employee is not covered by the Payment of Gratuity Act. And since here in subpart A he is covered by the Payment of Gratuity Act, the total of the dearness allowance will form part of the salary, because in this condition salary is equals to basic plus dearness allowance. So we'll take that as the last drawn salary. So that equals to 5,000 plus 3,000, that is 8,000 into years of services. Here 26 years are the completed years, and also he worked for 8 months, which is obviously more than 6 months. So that will be taken as one full year. So that becomes 27. So this is how the equation looks. 15 by 26 into 8,000 into 27, which comes up to 1,24,615. So now we have to see what is the least in these 3 figures, 6 lakhs, 10 lakhs and 124,616. Obviously it is 1,24,615. So that will be the exemption granted in case of this particular subpart. So we'll deduct 1,24,615 from the gratuity actually received, because that will be exempted, and the remaining gratuity will be taxable, and income tax have to be paid upon that, because that will be included in the total income of the employee. So this is how the calculations are done when a non-government employee is covered by the Payment of Gratuity Act. Now we come to the second subpart, that is when the employee is not covered by the Payment of Gratuity Act 1972. So here the formula to calculate the gratuity is different from that given in the previous case, that is when the employee was covered by the Payment of Gratuity Act. In that case, the formula was 15 days salary into the last drawn salary into the number of years of service. And here the formula is half month salary into average salary of last 10 months preceding the month of retirement into each completed year of service. So first of all, we have to calculate the salary based on the average salary of last 10 months. We'll take out the average of the last 10 months preceding the month of retirement, and then we'll multiply that amount by half, that is 1 by 2, and finally it will be multiplied by the total completed years of services, and that will give our figure, and then we'll see whether that figure will be deducted or the statutory limit will be deducted or the gratuity actually received will be deducted, because we have to deduct the least of the three, that is either the gratuity received or the statutory limit of rupees 10 lakh or the gratuity calculated as per this formula. We have to see which is the least, and the least will be deducted and the balance will be taxable. So let us start. The gratuity actually received by the employee at the time of retirement was rupees 6 lakhs, less the exemption under section 10 subsection 10, and that is calculated, which comes up to 1,01,400. So that is deducted and the taxable gratuity comes to 4,98,600. So now we'll see how this 1,01,400 is calculated. We all know that the least of the following three conditions are deducted. Number one is the gratuity received, that is rupees 6 lakh. Number 2 is the statutory limit of rupees 10 lakh, and number 3 is the formula based calculation of gratuity. So this is the main part of this question, how we'll calculate this half month salary based on average salary of last 10 months. So first of all, we'll calculate the average salary of the last 10 months preceding the month of retirement. How that will be calculated? It is given in this last part. 5,000, that was the basic pay, into 10 will give the 10 months basic pay, plus 3,000 into 60%, that was the dearness allowance forming part of retirement benefits. So total 3,000 will not be included, only the dearness allowance forming part of the retirement benefit will be included. So that is 3,000 into 60%. That comes up to 1,800, and for 10 months, so we'll multiply it by 10, and in this we'll add up the commission on total turnover. The commission is 1% of the total turnover for the year. So 1% of total turnover is 1% into 12 lakh. That will give the total commission for the year. So that will be divided by 12 and multiplied by 10 to get the commission for 10 months. So now we get the total salary for 10 months. Basic plus DA plus the commission for 10 months. The numerator gives the total salary for 10 months. Now we divide this total amount by 10 to get the average salary of 10 months. When we divide this total amount by 10, we get the average salary for 10 months. This is the main calculation part. So when this is done, we just have to multiply this average salary by half, that is 1 by 2. So that gives us half month salary based on average salary of last 10 months, and then this amount will be further multiplied by the total completed years of service, and that is 26 years. So this is how the formula is given, and this is how we have to calculate. First of all, we'll calculate the middle part, that is the main part, average salary of 10 months. Then we'll multiply that by half, and then further we'll multiply that by 26, that is total years of service. One more thing which we have to keep in mind here is the 6 months which he had served, 8 months which he has served over and above 26 years will not be included while calculating gratuity for the employees not covered by the Payment of Gratuity Act. In the previous subpart, when the employee was covered by the Payment of Gratuity Act, the months in excess of 6 months are round off as 1 and added to the total years of service. But in this case, the month part is ignored and only the full completed years of services are taken into consideration. So we'll not round off the 8 months to 1 year and add up to this years of services. Rather, the years of services will only be 26. So this is how the calculation will be done, and when we calculate this formula we get 1,01,400. So now we compare which is the least amount, 6 lakh, 10 lakh or 1,01,400. Obviously it is 1,01,400. So this minimum will be deducted from the gratuity actually received at the time of retirement, and the balance will come as the taxable gratuity, which will be taxed under the head salaries. So this is how the calculation will be done when the employee is not covered by the Payment of Gratuity Act 1972. Lastly comes the third subpart, that is when the employee is a government employee. This is the easiest amongst the three. The previous two was complicated calculations, but in this we don't have any calculation, because we know that if an employee is a government employee, then the total gratuity received by him will be exempted under section 10 subsection 10. So here we don't have to do any calculation, simply we have to deduct the total gratuity received and the taxable gratuity will come nil. So this is a very easy subpart. We all know that government employees are totally exempt from paying any tax on gratuity received by them, as the total gratuity received by them is fully exempt from income tax. So 6 lakhs minus 6 lakhs, so the taxable gratuity is nil. So this is how the calculations are done. We'll see one more example in the next class on this topic of gratuity. So this concept will become very strong in your minds. We'll see one more example in the next class, and then we'll sum up, and in a tabular form we'll present this formulas and these conditions of gratuity so that you can remember it for a longer time and you can fit that in your mind permanently. You don't forget these formulas and these conditions, because if a data is presented in a tabular form, it is easier to retain. So that we'll be doing in our next class. Thank you, students. Hope you understood the concepts which I taught in today's class. Thank you for watching the video.